Let's tell you about some stocks which are being looked at very closely in the dealing rooms in the light of the policy changes expected in the sugar sector. The Union Cabinet will discuss partial decontrol and probably go ahead and abolish the levy sugar mechanism. In this light, and if the news is favorable for the sugar sector, Renuka Sugars is one stock which a lot of fundamental analysts are suggesting to be bought at 24-25 rupees. It is trading at rock bottom, or I would say multi-year lows in terms of valuation. Stock is extremely under-owned among funds, and there have been some block deals in the last 1 week, clearly indicating that promoters themselves are buying from the open market. So decontrol definitely changes the fundamentals, and the stock can rally in case of this particular news, according to some of the fundamental analysts.
Well, apart from that, you had the entire real estate pack today, which was hammered in the session. HDIL was no exception. In fact, it ended the session lower by close to 5%, and dealers are suggesting shorting at current levels. They believe that the financial issues are only expected to accelerate, and that's going to put a major downward bias on an HDIL. In fact, there is a buzz going about that some of the banks are likely to sell their pledged shares. The company seems to have lost some of the key infra projects, which would have been money churners for it, and has also defaulted on select loans. So at a level of 48.3, dealers are seeing more downside. Ashwini, in light of this, how would you approach some of the real estate counters which did see a severe beating today?
Most of these guys, they keep getting into trouble as their stock keeps falling. So chances are that most of these DB Realties, HDIL, etc., they are likely to go down. DLF, which was looking positive till some time back, chances are we'll get back to those 205, 210 kind of zones. And basically, if the market is below the 200-day moving averages, these stocks are way below them, and you should expect them to outperform on the downside.
Ashwini, what are the specific stock strategies which you have outlined?
Well, the idea is a sell with a stop of 108, target of 97. Pantaloon Retail is a sell with a stop of 157, target of 145. And Coal India is a buy with a stop of 307, target of 321.
Mehrabun, you said that if we did our homework properly, there would be some potential stocks that we can look to buy or stay invested in. Which ones would those be? Okay, we'll come to Mehrabun in just a short while from now. But Rajat, wanted to get it to you. If you could just talk about, some of the stocks that have fallen on account of technical factors, not fundamental factors, and if the market stabilizes, will be the first ones to see a bounce back.
Well, I would think if you look at a couple of the media names, for example, the print media names, I think the outlook for them is turning out to be quite well over the next few years. So whether it be it stock like Jagran, that should do very well. As I mentioned about bank, if you look at something like a Yes Bank, which has also corrected quite well from the recent highs, their growth, this will be the 17th quarter of 30% plus earnings growth that they would be reporting. And I think the market share gains for them over the next few years will continue. So that stock will still keep on compounding at the earnings that it will keep on doing. Look at a couple of mid-cap PSU bank, for example, something like in OBC. This quarter, they would be the only PSU bank which would be reporting a YOY growth in profits in our estimate, and now it is at 0.5 times book. We always see cycles moving from 0.5 time to 1 time book, and the book itself compounds at 15% CAGR for them. And then I think a couple of mid-cap cement names, whether it be JK Lakshmi Cement, etc., some of them are, or Dalmia Bharat, some of them are big names. The market caps are very small. You probably need to see some pickup in the activity sometime in second half of FY14, and the asset valuations are extremely attractive.